zones, top to bottom, where to start, how to identify them, what time frame to use, exactly straight from this book, Success in Sight, Volume 1 and Volume 2, now available on Amazon. Show me some love. Go ahead and pick them up. Okay. This is a hands-on 60-day workbook challenge. Everything that you need to know and understand about the Forex market itself. All right. So without anything else being said, let's just go ahead and get into it. All right. All right. It's just like every other video, just like every time we go over this, when you are, excuse me, when you are going to trade the Forex market or any market itself, okay, regardless of the pair, either gold, the NASDAQ, NQ, EQ, silver, GJ, UJ, AU, or EU. You want to have your rules. Okay. You want to have your rules and you want to have your time frame. So first thing we're going to start off with is let's just, where we at? We're going to start with our rules. Okay. We're going to start with our rules. You know what? No, my bad. So let's run it back. So today we're covering zones, the ins and out of how to draw the zones when you are in the Forex market. Okay. Then we'll go to the rules. Now, when it comes to zones, that's your setup zones. Okay. So when it comes to me personally, you're not gonna hear me say support, resistance, supply, or demand that often. Probably close to never. Why? Because a zone is just a zone. Okay. Now, I'm just going to do a little drawing just real quick, right? If the market itself went up and it stops and it falls like so, right? We identify this area by putting a horizontal line there. That's just a zone. Okay. If you want to call it a resistance zone, by all means, but it's just a zone. Okay. If the market falls, stops, and then goes up, and we want to identify this specific area because the market stopped there and went up, and mark it by putting a horizontal line there, it's just a zone. Okay. If you want to call it a support zone, cool. Now, the reason why I just call it a zone, either look, man, I'll be like, hey, we have a top zone, we have a zone at the bottom or a bottom zone. The reason for that is because I need you to treat zones for just what it is. It's just a zone. When you have that mindset of market is going towards a support zone, right? Market's going towards a support zone. In your mind, you're thinking, hey, I need to buy the market. I got to buy the market. It's going to buy, it's going to buy, it's going to buy. Instead of just simply treating it, meaning like instead of simply reading and reacting according to what the market give you to at that zone. Okay. If you just say, hey, market is going towards a zone, right? Or at my bottom zone, right? You're just saying market is going towards the zone because a lot of time market itself can break through it, right? Because it's at a, again, support zone. It doesn't mean that it's going to bounce to go up. But if you have that mindset that it will, you're going to have a narrow mindset. You're not going to look at the bigger picture. When the market give you a buying setup, when the market give you a continuation selling setup, you're going to be so fixated on taking the sell going against the trend. Okay. So a zone is just a zone. By all means, if you want to call them support, resistance, or supply and demand. So the same thing goes for this right here. Again, I just say top zone because it's on top of it, right? Market's just going towards the top zone. Hey, if market hit the zone, I'm just simply going to read and react. Meaning if it gives me a selling price action, a bearish price action, a bearish engulfing to be more specific, then I'll take my sell to go down. Other than that, I'm just simply waiting for the market to tell me what it's going to do. Because it could always give me a bullish candle that closed above and then give me a let's change the color just for this, give me a bearish candle and then give me another bullish candle to go up, right? So in reality, what it did was it gave me a break and retest, all right? So basically it did this, and this. So on top of the zone. But if I'm so fixated, oh my God, we had a resistance zone, it's going to fall, I'm going to hurt myself. So again, it's just a zone. It's just a top zone or it's a bottom zone. Okay, so let's clear this out real quick. Now, when it comes to zones, okay, that goes hand in hand with your technical analysis. I mean, well, yes, technical analysis, like your setup, the double top, double bottoms, the break and retest. Okay. So meaning the setups that you look for to either sell the market or buy the market. You know, if you're looking for something like this, right? Or if you're looking for, let's do this, something like this. Oh, sorry. Let me get back a little bit. That way, I want you to see this, right? So if you're looking for a double top setup where the market hit a specific area and then come back later, weeks, months, or days later, so you could take a sell, or if the market gives you a double bottom, meaning it hit a specific bottom low, it went up like so, and then it come back to it, right? And you're waiting for it to give you your PA, of course, your price action, so you could react to it if it's a bullish, so you could buy up. So what I'm saying is, when it comes to the zones, your technical analysis, it has to be in the or on the higher time frame. Okay, so technical analysis, all your zones has to be marked on your higher time frame, and your higher time frame, or as always, the first one is the monthly. So we start with the highest. Okay, we start with the highest time frame first. Okay, the highest time frame first, the monthly, and then we drop down to the weekly, and then last would be the daily. Okay, the daily. Well, that looks a bit off. Bit better, right? The daily time frame. Okay, the daily time frame. So month, week, day. So you starting up monthly, you're looking for your setup. If there's nothing coming up anytime soon, everything's a distance away, you drop down to the weekly, nothing on the weekly, then you drop down to the daily. Just remember, when whatever you setup you have in the monthly will match the weekly and eventually will match the daily itself. All three time frame will be aligned. Okay. So always use the higher time frame to do your technical analysis, which is you marking down your zones, the areas that market stop from buying to sell, where the market stop from selling to buy. Okay, so that's what we're covering today, just zones and exactly how to draw that. Now let's go into the next one. Rules. So if you haven't seen any of my last videos, just go ahead and check me out either on TikTok, YouTube, Royalty FX Academy. So for TikTok is _ Royalty FX Academy _. But it will be regular Royalty FX Academy for YouTube and Twitter and TikTok. So let's get back to this. So rules, right? So you want to have rules when it comes to you trading the market. All right. So the rules falls in line with your psychology. It falls in line with your plan because that's what you do. It's a habit, right? Just like when you wake up every morning at 5:30 because you have to be at work at 7:30. I mean, you have to clock in at 8 a.m. So you wake up 5:30, give you time to take a shower, have breakfast, and you give yourself at least an hour and a half to drive to get there, at least a nice 10-minute early to clock in. See, that's part of your discipline, your psychology, right? The method you use, the step by steps. These are your step by steps to trade the Forex market very successfully to the best of your capability. Okay. So rule number one is exactly what was going over, right? Zones and that time frame. What I mean by that is rule number one mean your setup itself. So rule number one is going to be your setups, right? So setup, time frame, right? Um, the setup time frame has to be your monthly, remember, and it has to be week, and then the last one is your daily. So again, the rule number one, that's your technical analysis, the zones. When you back test, that's what you're looking for, the previous setups. You look for the monthly setups, and then you identify the weekly setups, and then you identify the daily setups. After that, you want to follow rule number two. Rule number two is the time frame that you are going to use to execute, to enter that trade. Okay. And that time frame is going to be the H4, right? So the H4 is the 4 hour time frame. Okay. And it's going to fall in line with rule number three. Okay. So rule number four is the lowest. Okay. The lowest time frame you will use and you want to use when it comes to entering a trade, either for a buy or a sell, is the H4, the 4 hour time frame. Okay. Where the price actions are available within a 4 hour increment, right? 1, 5, 9, either AM or PM. Okay. Very easy. All you got to do is just wake up and then take your price action. We'll get off work 5, take your price action. Get home from work 9 PM, take your price action. Okay. Let's see. And then let's go ahead to rule number three. So rule number three, when it comes to your trading log, right? How you trade, method you use to enter, to execute. So number three will be PA, right? Your PA is your price action. Okay. Your PA is price action. So just abbreviate that. Okay. So it's price action. So, and the price action that we use to either to enter the market, either for a buy or sell, is the engulfing bar. Okay. So we use the engulfing bar. That's what we use. All right. So it tells a story. It tells on itself. The engulfing bar tells you that, hey, buyers have engulfed sellers. So buyers have taken over, right? Sellers have engulfed buyers. Now sellers have taken over. So the candle itself shows you that buyers have now engulfed or sellers have engulfed. So the bullish engulfing or the bearish engulfing. Again, I do have the book available on Amazon, right? The ultimate price action, all 5 variations of price action that the market will give you, either if you trade gold, NASDAQ, UJ, UMEX, SPX, US 30, right? It's going to be the same price action. Just the candles could be a little bit bigger, but it's going to be the same price action. I guarantee you that. Okay. So we using price action engulfing for rule number 3, and rule number 4, which is the very last one and very important, of course, that is your SL. So your SL is literally your stop loss. Okay. So stop losing. Okay. Put a lot of S's on that. Okay. The stop loss literally mean stop losing. Okay. So of course, again, your stop losses go at the last high or the last low, either if you are buying the market or selling the market. So I'm gonna run it back slowly, right? Rule number 4, when it comes to trading, after you use the higher time frame for your technical analysis, use the 4 hour for your entry time frame, and use the H4 price action for execution. You want to use the previous low when you're buying the market for the stop loss, when you're buying it, right? And you want to use the previous high to put your stop loss when you are selling the market. So last low or last high. Okay. So these are your rules. So again, your rules when it comes to trading the market. Rule number 1, use the higher time frame for your setup, monthly, weekly, or daily. Rule number 2, always and only use the 4 hour time frame for the executing time frame. That is the lowest time frame you will drop down to. Rule number 3, only and always use the engulfing PA, the engulfing price action, either for a buy or for a sell. And rule number 4, your stop loss will always need to be placed, must be placed either at the last high for a sell or the last low for a buy. Okay. So these are your rules. Now, let's go ahead and get into it. So zones. So, a lot of time when you get into the market, right, this is right here is a double top, right? Market went up, boom, stop, went down, and then it went back up again. Now, normally, right, when you mark your zone, let's thin this out real quick. Let's do gray, right? Normally, when you mark your zone, what you want to do is the first thing you want to do is change your chart from the candle format into your line chart. So it will look something like this when you do the line chart. Okay. Boom, 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 boom. All right. So let's make it a little bit more precise with it. Okay. Stop right here. Okay. Here. And then here. Okay. And then boom. All right. Now, the reason you want to use the line chart is because you want to know the exact turnaround point. So let's reset a little bit, right? When you are marking your zone in the higher time frame, once you get into the chart, the first thing you do is change it from candles to the line chart. Why? Because the line chart shows you the exact turnaround point, meaning where the market stops at, the exact point it stopped and start turning around. Okay, so that first point is going to be your first zone, right? It's going to be your first zone. It's going to be the first line. Okay. Now, once you put that first line, you put it back into the candle format, the candles, right? Then you will see the wick, right? The wick is the liquidity, the stop hunt where other traders had the sell stops, buy stops, take profits, and stop losses. It wicks a grab to take sells, buys to go back down, right? So for this zone, top zone, right? So first you identify the turnaround points, and then you start from the left going straight across. It doesn't matter, since we are studying, this had already happened, right? It doesn't matter if this is a little bit above. So when you're studying, you just use the exact turnaround point and you run it straight across. Now, the next zone, the next part of the zone is the wick. So you're going to identify the wick starting from the left, right? And then you're going to run it across, right? Like so. Boom. Now, all together, right? Let's see. Can we use this? Let's use this real quick. All together, it will look something like, let's say, oh no, it's messing with me a little bit. Hold up. It will look something like this because the turnaround point will be the close of the last bullish candle. I'm sorry. That's one of the things I forgot to mention. The turnaround point is for a top zone itself is going to be the close of the last bullish candle. Okay. The turnaround point with the line chart is going to be the close of the last bullish candle. And then the wick, which is the second part of the zone, is going to be the wick of that last bullish candle wick. Now, sometimes the first bearish candle, the wick could be a bit higher, right? So we'll use the wick high. So that is the highest. Okay. So again, it will look like this. So from the wick, okay, and turnaround point straight across. So normally when you have a zone, I am so sorry if my line look a bit iffy, but when you have a zone, that's exactly how it would look like. Okay. The reason for that is because a lot of time, notice that with this zone, notice that how the market went into the zone and a little bit past it. But when that 4-hour candle, the last bullish candle closed, it closed exactly within that turnaround point. See that? The whole area is the zone, but you want to make sure you understand the exact turnaround point, because sometimes when you have different variations of double top, right? See, this one is a little bit higher. Let's just say hypothetically, right here, right? Let's just say hypothetically it did this. Let's fix the zone, change the color real quick, right? It stops here and then it turns around just like that, right? Because a lot of time it stays a little bit below it, but the candle sometimes it would give you for the last bullish, it will have a wick, right? Like so. See how the body would look like that, kind of something like this. Make sense? Very simple, right? Now for the one that we just did, where it went above it, what I'm gonna do is like this right here. See, it went a little bit above the turnaround point. What I'm gonna show you is the sell that I took today, this morning for the GBP JPY. Let me show you this real quick. All right, so we did talk about this before, which was the buy that I took. If you watch the previous videos, you would see that this buy I took and stop loss was at the last low, right? We had a crazy dump of the market, gold, everything dumped, but the rules that we follow, we put a stop loss at the last low. Notice that it's a little side teaching real quick. Notice that the market, what's going on? Come on, there we go. Notice that the market come right back to the zone multiple times, right? But it never wicked us out. It never did. And then it definitely went TP plus. Now let's get back to the zoning, right? So notice the turnaround point, which would be here. This is the wick liquidity itself, right? So altogether, this is the zone, even though it broke through the turnaround point, but market is at the zone. Okay. We have to respect it for what it is. So I was able to pull this a bit early in and put my stop loss in profit. The swap fee costs a lot. It's crazy, right? The swap is crazy. Yeah. So when you swing in, you got to pay for that swap, especially when you're selling it. But this is the whole zone. Okay. So what I'm gonna do is I'm gonna clear this out and I'm gonna show you how it would look like without the candle. So I'm gonna just, since this is the 4 hour, right? Let me show you how it looks like with the daily first. All right, let's pull this back a little bit. Okay. Yeah, definitely. See that? That's it right there. So I'm gonna draw the zone for you. But first thing I'm gonna do is put the line chart on. You see that? Of course, market went way past it, but look, this right here is our first zone, which is from here, right? Oh snap, let's bring it up. That's not what I meant to do. Right? So this is our first zone right here, the turnaround point, which is the turnaround point is start from the wick and then we bring it straight across, right? Just like so. That's the turnaround point. So when we put the candles, when we switch to the candles, right? Now we're going to get the full premise of the zone, the full zone itself, right? So that's the turnaround point. Now this is the last high it went, which is all the way up there. So we start from the wick right here. That's the wick. And then we're going to run it across. Okay. See that? So together, that's the full zone. Now, of course, that's just how I like to draw my zone. Keep the chart as clean as possible, right? Just a few little line across, right? Now, one way, we do that also is when we use the rectangle property, right? So like so. So if you already understand how to mark the zone and you're not going to use the line chart because you understand the last bullish candle is the turnaround point, you will just start from here. Right, I'm going to move it back a little bit so it could be a bit more precise. Like so. We're going to drag it up and run it across. All right, you see that? That itself is the full zone. Okay. Now, within that full zone, you have a double top. It just happened to go like really deep into the zone and it closed a little bit above it. Yes. Did it break? Yes. Have it validated the full break? No, not yet. Meaning, did it come back down, give you the retest with a bullish engulf and to continue up? No. So right now it is a double top, which is divergent also. But this is the zone. You see how that looks? So when I put it back to the line chart, that's how it would look like. Okay. Understanding how to mark the zone, the ins and out, will help you out. That way you understand what you're waiting for. Just simply wait. Okay. The next, let me go ahead and do a little annotation real quick with the, that way I don't have to keep on jumping left, right? So the higher, you know what, put it right here instead. Okay, cool. Here we are. Let's go red. I want it to stand out a little bit, make it thicker. So look, see, market went up, fell, went up, right? Turnaround point, full zone. You see that? That's right there. It was, my bad. Let's do this again. I'm so sorry. I realized I was standing in front of the screen, right? Look, the market itself went up. It stops there and turn around. But this is the highest it went as far as the liquidity wise. But this is where it stopped at and then turned down, right? So this is my zone from the wick and the turnaround point. When the market went back to give me a double top, notice that it's just like this one did, right? It closed above it, but guess what? It's still within my zone, right? It's still within my zone. It closed above it, and then the next one bought up significantly and then eventually come back down to give me a daily bearish engulfing. If you pull the daily price action for what it is, when you are a swing trader, it's sold for a full day straight. So either if you had this area as a TP, it would have been smashed. But notice how it came into the zone, respect the zone, and then fell. So I am just simply reading and reacting to what the market is giving me, right? Because it's the same concept here. It went, it stops here, right? And then the next candle went up and then stops, falls, right? When the market come back to the area, it's within the zone, okay? Very simple, all right? So I just wanted to show you guys that. That way you guys understand what I'm talking about when it comes to the zone. Of course, I'm going to go more in depth later on. But for now, let's keep it simple, sweet and simple, right? So we drop down to the 4 hour, right? Look at that. It's literally within the zone. So naturally speaking, which one is this cell? Is it this one? Here would be your bearish engulfing. Top here would be your stop loss. Let's minimize this real quick. Okay. So you will just target structure for structure, meaning here's your first TP and then, so on and so forth. But just like that. Okay. Literally just like that. Now, because we have a bearish engulfing, we have to take it for what it is. Let's just say it went up to give us a bullish engulfing. That means we'll get a black candle that engulfed this last gold candle. And then we'll just buy it for the continuation. That's it. Literally, that's it. We'll change our bias from a sell to a buy. Not because we want to, because that's what the market shows us. That's what it gives us. We simply reading and reacting. Okay. So, but as of right now, I am in the sell from the top and I put my stop loss in profit and I'm looking for a bearish engulfing to take to continue back down. That's adding on to my other sell trade. If it continue, I truly hope it does. So back to this. All right, back to the zone. Okay, so literally kind of like the same thing. So it went a little bit above it, but it did respect it. So rule number one, when it comes to marking the zone, use the line chart. Okay, use the line chart to get the exact turnaround point, right? To get the T point, the turnaround point. Okay, and then you could use the candles to identify, to get the highest liquidity, which is the wick itself, right? Candles for liquidity, okay? Let's put liquid. All right, for liquidity. So combine it together. That rectangle property is your full zone. Now, you probably wondering why I didn't put it above that. That's because you placed this zone before this was there. So it just happened to go a little bit above it, but it did respect. That's it. Okay? So since we're covering these, let's go ahead and move on to the next one.